Welcome back, everyone. Why NIO battery swapping beats fast charging. Right, so you already know the race is on for the fastest charge time. Automakers like BYD are pushing this flash charging thing to get a battery from 10 to 70% in just 5 minutes. I mean, it's an undeniable engineering marvel for you as a driver. It absolutely is an engineering marvel. But what's fascinating here is the sheer physics of making that happen. Because providing that level of immediate convenience, it creates a massive, really unsustainable burden on the electrical grid. Right, because of the power draw. Exactly. When you look at the raw power requirements of a 5-minute charge, the real bottleneck isn't the car anymore. It's the transmission lines coming from the power plant to your local neighborhood. My analysis suggests the sources put this into perspective perfectly. A single 1 megawatt fast charger pulls the instantaneous power equivalent of 300 household air conditioners turning on at the exact same moment, which means a standard commercial station operating 20 or 30 of those chargers simultaneously. Well, it demands the electrical load of an entire industrial park or a small factory. Wow. Yeah. And if we scale that up to just 10,000 ultra-fast chargers running nationwide during peak travel times, the total demand hits 10 gigawatts. That requires the equivalent total output of 4 large nuclear reactors running at full capacity constantly. 4 nuclear reactors just for 10,000 chargers. Right. And since fast charging spikes when people get off work or hit the road for holidays, utilities are looking at regional grid demand surging by 70 to 85% during peak hours by 2030, according to industry projections. Okay, let's unpack this more thoroughly, because the traditional utility response would just be laying thicker copper cables and building massive new substations to handle those surges. But that infrastructure costs billions of dollars in taxpayer money and takes decades to permit and build. And is that even economically viable just to shave a few minutes off a charge time for a relatively small number of drivers? In my opinion, that's the core issue here. That brute force approach completely ignores grid efficiency and long-term sustainability. We need to fundamentally change when the electricity is drawn from the grid, not just build more capacity to handle the worst-case scenario. This is where decoupling demand becomes absolutely critical. Right. Which brings me to NIO's battery swapping ecosystem. Instead of plugging in and demanding a megawatt of power instantaneously, picture this scenario. You pull into a station, and an automated system physically swaps out your depleted battery for a fully charged one in about 2 to 3 minutes, faster than filling a gas tank, honestly. And the magic is what happens behind the scenes. Those NIO stations charge their stored batteries slowly and steadily over hours, often overnight when demand is low. They completely bypass the grid stability problem because they don't demand astronomical power the second a driver arrives. They function more like a reservoir than a fire hose. The scale of this operation in the sources is really impressive. NIO isn't just beta testing this concept or running a small pilot program. They have completed over 100 million battery swaps since 2018 across more than 3,700 stations globally. Yeah, their newer PowerSwap Station 4.0 holds 23 batteries and handles up to 480 swaps a day. That's massive and growing every quarter. It is. And if I connect this to the bigger picture, these stations act as a distributed energy storage network that utilities can actually rely on. A utility company loves this because the batteries sit on site, allowing the station to strategically charge them overnight during off-peak hours when electricity is cheap and plentiful and the grid is underutilized. So they're balancing the grid while saving money. Exactly. NIO has already shifted over 740 million kilowatt hours of electrical load precisely this way, moving demand from peak times to off-peak windows. And they're tying it directly to renewables too. The Zhejiang West Station actually consumes over 1,300 kilowatt hours of its own localized solar energy every single day from panels on the canopy. Right. It merges solar generation, battery storage, and EV refueling into one unified asset that produces as much as it consumes in some cases. But beyond those macro grid benefits, the swappable ecosystem solves a major pain point for the consumer, which is battery obsolescence and degradation anxiety. Here's where it gets really interesting for you as a driver. Usually your EV is permanently tied to the exact battery tech available the day it rolled off the assembly line. If battery technology improves next year, you're stuck with the old pack. But with a swappable network, your hardware is future-proofed almost magically. When NIO rolled out their new 150 kilowatt-hour semi-solid state battery, drivers simply swapped it in at any compatible station. And just to clarify for those tracking battery chemistry, semi-solid state uses a partially solid electrolyte. That drastically increases energy density and safety without changing the physical footprint of the pack. Yes, it instantly gave older vehicles the capacity for a 554-mile trip without the owner needing to buy a new car or finance a battery replacement. Let us dive into the technical analysis and green day strategy for NIO. Looking at the recent price action, The stock opened at 4.690, reached a high of 4.810, experienced a low of 4.630, and eventually closed at 4.780. The chart currently displays an intraday consolidation and range-bound pattern. After an initial drop at the open and a quick recovery, the stock spent the majority of the session trading sideways in a very narrow, choppy channel between 4.74 and 4.81. Technically, the stock is demonstrating short-term consolidation, with the price tightly coiled around several key indicators. It closed right at 4.78, sandwiched between the EMA 20 at 4.77 and MA 50 at 4.78, while sitting just above the VWAP at 4.76 and MA 200 at 4.74. The price is resting near the top boundary of a green Ichimoku cloud, which provides an underlying layer of support. For a green day prediction, if the stock maintains momentum above the 4.78 level and breaks out of its current tight consolidation, we expect a retest of the high of the day at 4.81. Clearing that resistance with strong volume opens the door for a push toward the 4.85 to 4.90 range. In this case, key levels are a target of 4.85, resistance at 4.81, support at 4.77, and a critical floor at 4.74. Now let us examine the red day strategy and what happens if the current technical setup breaks down for NIO. The MACD is flat and hugging the zero line at minus 0.002, indicating that momentum has stalled and the stock is waiting for a catalyst to pick a definitive direction. If the prediction for a red day plays out, the price will fail to hold the current support cluster. Specifically, if the stock drops below the EMA 20 at 4.77 and the VWAP at 4.76, it will fall into the Ichimoku cloud and momentum will likely shift downward. A further break below the MA 200 at 4.74 would absolutely confirm this weakness. Losing that 4.74 level would likely result in a slide back down to test the morning lows near 4.63. For this red day scenario, the key levels to monitor are clearly defined. The immediate resistance to watch is 4.78, which represents the current close and the MA 50. The primary support level sits at 4.74. If that support fails, the critical floor drops to 4.63, the daily low. Consequently, the ultimate downside target in a bearish session would be a retracement back to 4.63. So what does this all mean for us in practical terms? In my analysis, fast charging might solve the immediate waiting problem at the pump, but it risks breaking our macro energy infrastructure during the transition. Battery swapping elegantly solves that utility-level grid problem, saves billions in transmission upgrades that would otherwise be passed to ratepayers, and gives you a faster, infinitely upgradable experience. In my opinion, it's a stark reminder that the invisible infrastructure supporting our vehicles is just as critical as the cars themselves. We rarely think about power lines and substations until the lights go out. It absolutely is. And this raises an important question to leave you with. If our cars' batteries are quickly becoming a shared, interchangeable network of energy storage for the broader grid, capable of soaking up excess renewable power and discharging when needed, will the traditional concept of actually owning your vehicle's power source soon become completely obsolete? Would you rather own a depreciating asset or subscribe to ever-improving performance?